again. So let's take a little look at the market in general right now. So this kind of gives you a good guideline as to where the market has gone. And what we did is we took all the numbers through the year ending. So this would be 2019, 2022, and 2023, obviously here at the top. And so what you can see here is what basically has started to happen, or has already happened, is we're essentially sitting at about 50% of the inventory that we used to have in 2019. Now, I want to roll back a little bit. In 2019, that was a good real estate market. That I would call that a balanced market. We had a good level of inventory. There was great buyer demand. As you can see here, we had over 1,800 real estate transactions happening. I mean, it was a good market. Things were moving, and not to the extent that they are today, but things were moving. It was balanced. Buyers were happy. Sellers were pretty happy. Everybody was living in a good world. COVID happens, and all of a sudden we're in this new marketplace. And what started to happen basically March of 2020 is inventory levels started to drop. Why? Because demand outweighed supply. And when that happens, we essentially can't list enough homes in order to keep up with the demand of buyers. On top of that, interest rates were maybe not artificially low, but certainly were historically low. And everybody that I certainly know of either bought or refinanced during that 2-year period, because why not? Money was so inexpensive. Unless you lived under a rock or had some other circumstance that prevented you from doing so, why not take advantage of the market and refinance? And that further basically removed inventory from the market. Why? Because you have this lock-in effect. You have sellers who say, again, Scott, I know I can get so much money for my home, but quite frankly, I have a 2.5 or 3% interest rate, and where am I going to go? Even if I downsize, and sell my home for $1 million and buy a $600,000 condo, between the HOA and the new interest rate and all that stuff, I'm going to be paying more to live in that condo than I do in my home, and I like my home, so I'm not going to move. And so you're seeing that here. I mean, look at the difference between 2022 and 2023. We're down about 25% in just available listed inventory, right? And that's why you as buyers out there are feeling like there's nothing for sale, because yeah, we're at historic lows. In fact, it's not captured in this chart, but I went back as far as the MLS will allow me, which is 2002. 2023 was the lowest, the least amount of new listings that hit the market in any given year, going back to 2002. Again, I couldn't go back any further, but if I went back further, I'm assuming we could go even further back and understand that inventory this is the lowest. So we're really at a low point of inventory. Now, the encouraging news as a seller or potentially as a buyer, or just for the market in general, is that total number of transactions hasn't had the same amount of same dip. What that means to me is that the buyer demand is still there. We still see buyers coming out aggressively looking to buy homes. And what I feel is happening is that because inventory is so low, it's actually pulling the whole market backwards. It's the inverse of what happened in 07, 08, where inventory levels spiked and the buyer demand dropped off. So we had too many listings for sale. We have the opposite effect right now. We have too few listings for sale, which is creating fewer actual transactions in the marketplace. But you can see here, transaction volumes down 23%. From 2019 and 18.57% from 2022. Now, what I think is really interesting about this chart is everyone talks about 2019 as the kind of gold standard of the normal. I think that we're in a new normal. I think that the goalpost got moved, and I think that for the foreseeable future, this is our new normal. Unless interest rates drastically drop again and unlock, millions of potential home sellers and buyers, I don't see what would cause the market to go back to where it was in terms of inventory level wise. There is that idea that maybe interest rates get too high and buyer demand dies down, and that could happen as well. The challenge is that inventory levels, depending upon what town you're looking in, are so low that we would essentially have to sell no homes in a town for, say, 5, 6, 7, 10, 12 months in order to get back to what was a normal inventory level of 2019. And again, barring a seismic shift in the world, I just don't see that happening. So I think that for home buyers and home sellers, this is just the new market. It's going to be low inventory. It's going to be high competition. And that's just going to be the hallmarks, I think, of probably the next 5 to 7 years. Gary Keller says that real estate markets run in cycles, and cycles last 7 to 10 years. We're now 2 to 3 years into this new cycle. So give or take another 5 to 7 years. I think that's the cycle that we're in. Again, barring any drastic changes in the world. Looking down here, I mean, look at average list price. You're up 22.4% and up 7.56% from last year, but 22% over 2019. I mean, pricing has just increased so fast, and sales prices have increased even faster, right? I mean, look at our average sales price back in 2019 of 871, now well over 1.2 million. And this is the first time in history that the average sales price across this aggregate of towns, which is Chatham, Madison, Short Hills, Summit, South Orange, Maplewood, and New Providence, is over 1.2 million. So we're just seeing prices increase. And look at that number over on the far right, 5.72% on average over 2022, which is just incredible appreciation. We were normally seeing appreciation somewhere between 1.5% and 2.5%. So this is nearly, depending on what year you're looking at, nearly triple the appreciation in any given year. Days on market still super low. And the one kind of chink in the armor, if you will, is that list to sell price ratio did drop by 1%. You know, it was 106 last year, it was 105, or sorry, in 2022, it was 105 in 2023. But I liken that to list prices have gone up, right? Sellers essentially are asking more for their properties now than they ever have. Buyers still see value in paying on average 5% over list price. But you know, they're saying, well, hey, you're already starting at a higher mark, so we're not going to go as high percentage wise as we would. And yet we're seeing new historic pricing on pretty much everything that's selling right now. And that's continuing into 2024. If I extrapolate this data through the first 45 days or so of the new year, we're seeing the same things at foot. Low inventory, a week-to-week market. And what I mean by that is everything that comes on Wednesday and Thursday is sold by the following Tuesday, and then new inventory comes on the market again. So we're seeing that inventory levels are just super low. Still, we're seeing buyer demand up, up. It was just 2 weeks ago, there were lines at open houses again. People, open, if you looked at Showing Time, which is the service we use to book showings, everything booked up, multiple appointments. So the demand is out there. And we just see a lot of buyers in the marketplace, and still few sellers out there. And what I think is most important to share is we're seeing pricing still going up. We're seeing properties that even a year ago sold maybe, let's say, in the nines, they're now selling in the low millions. So you're seeing this appreciation cycle still continue in our local marketplace. So right now, we don't see any signs of this letting up. And I know that's maybe good news for my sellers on this call, bad news for my buyers on this call, but let's talk about how buyers can win in this market too.